Hey everyone, Dell has become one of the more popular AI stocks in the market today, and after the company reported quarterly financial results, the stock price went crashing over 20% because of all the built up hype and enthusiasm that was accumulated in Dell's stock price. So now investors are curious and they want to know what's going on with Dell. That's what I'll offer in this video. I'll take a little bit of a deeper dive into its latest quarterly results, so investors can learn more about what's happening at Dell. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so in its latest quarter, the COO and vice chairman of the company said that revenue was $22.2 billion, and that was up 6% with exceptional growth in servers and a return to growth in our commercial PC business. That's the big thing to remember with Dell, is that it has two sides of the business, the server business and the personal computer business. The personal computer business is still struggling, but the server business is thriving because that's where all the AI spending is going towards. So their two-sided business is leading to slower growth in one segment, which is its larger segment, and then the smaller segment where the AI is housed is growing much more quickly. The COO saying that they have now shipped more than $3 billion of AI servers over the last 3 quarters. And that's not really a large number when you consider the company generated roughly $20 billion in revenue in its latest quarter. I'm sure investors would like to see more of its revenue coming from the AI segment and less of its revenue coming from the personal computer segment, which is not very exciting at the moment. The company saying their AI server backlog was $3.8 billion, growing by approximately $900 million. So orders are coming in, and orders are coming in faster than Dell is delivering these orders because of the vast growth in this segment. They've seen an expansion in the number of enterprise customers buying AI solutions, which remains a significant opportunity for us given we are in the early stages of AI adoption. So Dell, like many other AI companies or many companies operating in the AI space, signaling that it's still very early stages, that the interest they're seeing from customers continues expanding, orders continue growing, interest continues expanding. The artificial intelligence industry is only just getting underway, right? Remember, it feels like forever now, but the large language model ChatGPT was only launched in late 2022 and only really gained momentum in early 2023. So we're only about a year and a half into this AI wave, even though there's been investments and research and development going into this category for roughly a decade or more. Innovation in the category only recently took a big step forward. And I wouldn't be surprised if there's more innovation coming in this industry now that we've unlocked one area of significant potential. Management saying they expect commercial PCs to continue to improve as the year progresses. We remain optimistic about the coming PC refresh cycle. And that's what I've heard from multiple companies that operate in the personal computing industry, including Microsoft, which has said that it expects a rebound in the personal computing industry this year. Intel also suggested it forecasted low single-digit growth in the computing industry this year. AMD, similar forecast. And finally, Micron, which sells memory and storage into the personal computing industry, also suggested it expects low single-digit growth in the personal computing industry this year. So several players in the industry, several of the largest players in the industry, are all forecasting a return to growth in the PC cycle, and that's good news. And it's only the beginning of this refresh cycle. 2024 will be the beginning, 2025 will increase, and I suspect the peak will be in 2026, and then the rate of growth will start to slow down again. Remember, this is a mature industry. It's not going to grow very quickly in the long run, but in this near term, there's a huge refresh cycle upcoming, and that's what's going to drive growth in the PC industry over these next 2 to 4 years. The PC installed base continues to age. Windows 10 will reach an end of life later next year, and the industry is making significant advances in AI-enabled architectures in applications. So these are just a few of the factors that will drive that booming replacement cycle for personal computers over the next 1 to 4 years or 2 to 4 years. And this is what Dell plans to capitalize on in the near term. Now, in terms of AI, Dell said they launched the Dell AI Factory to help accelerate AI innovation and adoption, and that combines their Dell solutions optimized for AI workloads with an open ecosystem for partners, including NVIDIA, Meta, Microsoft, and Hugging Face. Dell highlighting that its direct-to-chip liquid cooling improves overall power efficiency by 2.5 times. And this is a key area of investment, a key area of focus for these companies, especially hyperscalers like Amazon, Microsoft, and Google with their cloud businesses. They're looking for power efficiency because they're employing so many servers, so many graphic processing units. These are expensive to operate. They consume a lot of power. And so getting more efficient in terms of power will drive down cost and improve profitability, improve performance industry-wide. So the power consumption of this industry is becoming intense enough where there's a great focus to optimize, and Dell is one of the solutions here with its liquid cooling, will allow better power efficiency, according to Dell, better than 2.5 times efficiency here. If you didn't watch my latest update on Dell stock, let me make this bigger so you can see. I recently updated my recommendation for Dell. Remember, coming into the quarter, I did not have Dell stock rated as a buy. I told investors not to buy it because the valuation was already expensive going into the quarterly earnings release. And so I suggested it was safer not to buy the stock. Now, after the earnings came out, I digested the information and I reiterated my hold recommendation for Dell. I still think it's too expensive relative to its prospects, given that it's not an AI-only business. The AI side of the business is less than 40% of its overall revenue. So given that fact and the fact that the rest of the business is a slow growth to no growth longer term, I don't think Dell deserves those premium valuations it was trading for heading into the results. Now, the valuation has come down a bit following the results, but I don't think it's come down enough to justify a buy rating for Dell stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.